Hello and welcome to It's Your Business with Mario Toneguzzi on Megapix Media. Joining me today is Anne-Marie Lurie, who is the Chief Economist for the Calgary Real Estate Board. Thanks for joining us today, Anne-Marie.
Thank you for having me.
Okay, you guys came out with the latest stats for September MLS stats for the market. Let's start by looking at some of the components of the housing market, and obviously sales. Everybody talks about sales. Sales were up 25% year over year. Tell me what's happening in that area.
We've definitely seen stronger sales this month. Now, it hasn't been enough to offset the losses we had earlier in the year, but some of the stronger sales have been driven mostly by actually growth in the mid-range of the market, mostly detached product. We've also seen growth in row and everything essentially but apartment condominiums is where we've seen improvements in sales. Now, there's a couple of reasons for that. One, in part, we're still playing somewhat of a catch up from earlier in the year. Second aspect is interest rates have been really low. So, the declining rates on lending has really helped bring some people back, especially when you tie it in with the fact that we've had easing prices ahead of this. So all of that combined has really encouraged some sales activity. Not enough to offset earlier losses, though. We're still lower than we were last year by 9%.
And historically, like the sales in September, how do they compare to what's happened in the past? I guess during that month.
They were actually quite strong compared to even historical levels. So, really some strongest levels that we've seen over the past 5 years. Now, it's not record levels for us, not in Calgary. I know in some parts of the country, they're seeing record levels of sales. We are not seeing that, but it's still lower than what we had kind of at our high after the first energy crisis in 2014. But definitely it's better than what we've seen over the past 5 years. So we have seen some shifts in our market, things that we haven't seen for some time. So that improvement in sales and then also that reduction in supply. So the market has shifted a bit.
Okay, well, let's take a look at listings. New listings were up 0.1% year over year. However, the inventory at the end of the month of homes on the market was down 12% compared to a year ago. So what's happening in that area?
Well, generally that pace of sales has outpaced any rise in new listings. So we've seen much more sales versus the new listings. So the supply levels or the inventory on the market has been coming down. And that actually is one of the reasons why we're seeing, when we think about an impact on pricing, that's part of the reason why we've seen some movements in price is because we haven't seen supply levels move this low for some time either. So we have been struggling with oversupply, too much supply for the demand in the market for, really most of the past 5 years. We're finally seeing things move into much more balanced territory. Now, again, I put some caution with that because it's not across all property types. I mean, we're seeing most of this driven from what's going on in the detached market. That's the segment of the market that is moving into much more balanced conditions.
Okay, and let's look at prices. The benchmark price for September was $421,700, and that was down 0.2% compared to a year ago. What's happening with prices right now in the market?
Well, there's a couple aspects. I mean, the decline has mostly been driven by the fact that the apartment sector has struggled, and same with the row in terms of pricing. If you start breaking that out in different property types, you see slightly different results. Like the detached market has actually seen some improvements compared to last year. So we're really in a market that it depends on what property type that you're dealing with. Now, we have seen that prices month over month have been starting to trend up over the past several months from some of the pullbacks that we saw earlier in the year. And that's really resulting in levels that are very comparable to last year. Now they're still down significantly from 2014. There is a big difference depending on property type. And I would also expect that even if we start looking at different price ranges, you're going to see different activity. Because when we break down the market in different price ranges, what we're seeing is that, areas that are in the more affordable product type.
Mhm.
And let's just take out condos out of the mix. Like that's a different story. But if you look at the more affordable of the detached market, the more affordable of the semis or the rows, we're seeing that balance in the market. So that level of supply relative to the demand has actually gotten a lot tighter. So that tells me that that's probably where you're starting to see some improvements in price. Whereas the upper end of the market is still struggling with a lot more supply than demand. So you're likely having very different price trends in that upper end of the market versus what we're seeing in the mid-range to the lower end.
Okay. Now, as an economist, is there any other stats that struck you from September that were interesting?
Um, well, I mean, I think I have a bit of caution because I look at all those other stats. So I'm looking at these housing stats and they've been a bit surprising on how strong that they've been following COVID, the initial impacts of COVID. But I am quite concerned about some of the other stats that I'm seeing primarily on the labor market front. While we might see some of that today that we're seeing much more balanced conditions, I'm a little bit more cautious about the future just because when I'm looking at our unemployment rates and the job losses that we're seeing, that does give me some pause and some concern about what will be coming in the months ahead. Like I said, the biggest surprise is that the market has moved into balanced conditions
Hmm.
for some property types. Like that's been a bit of a surprise. I mean, we have been struggling with too much supply for some time. So to see that movement, was definitely not really expected, at least at this stage. But I do have some caution because I am looking at those employment numbers, and we still have a lot of unemployment rate, a high unemployment rate in this city. And we have to think that there's also some tightening that's going to be happening, with some of the government subsidies over the coming months here. So
Yeah.
I think there's still a lot of uncertainty in the market right now.
Plus, we just saw the other day Suncor announcing, massive layoffs here in the next while. So, yeah, we're not out of the woods yet.
No, not quite.
Okay,
So
thanks a lot, Anne Marie, for joining us today.
thank you.
Okay, that was Anne Marie Lurie, who is Chief Economist with the Calgary Real Estate Board. This has been It's Your Business with Mario Toneguzzi on Megapix Media. Thanks for joining us today.